Hello, today is January 17th, 2015. I'm Tennant. Let's go over my calls from Thursday night. Thursday night, the market was falling off a cliff. I predicted a big rally and we got 26 3/4 points, so that worked. Things didn't go exactly as planned because I thought we would have a large gap up, which didn't happen. And I tried my amateur hand at Elliott wave counting. And when we undercut this low, which I was not expecting, it invalidated the count. During the day, the system said ultimately higher prices would print, which they did. It now says there is a false move higher. There is an unsatisfied sell signal, and we have new targets from the mejt system of 2003.88 most likely on Tuesday and 1993.60 most likely by early Wednesday. Well, how is it possible when the market's falling off a cliff late Thursday that I say we're going to have a big rally? And how is it possible that with a straight line move up, I'm predicting a big drop? Well, I would like to refer people to the introduction to my book, The mejt System. And in the last chart, in that chapter, you will see pretty much the same formation we have now. We have mejt calling for a retracement and a straight line move in the other direction. Usually what happens is you get a gap down and the retracement targets from the mejt system print. Let's look at a few other things. It's generally strong when you start out low and rally all day long, particularly when there's a weekend coming up. Prices tend to follow through, but it's not strong unless we take out this high. And for the reasons I'm going to discuss, I don't think that will happen. Here's the same chart. We had a gap up early Thursday. It was immediately rejected. That's pretty significant. This is just a retest of the high. It hasn't gone through it, and until it goes through it, the assumption is it's a legitimate change in trend. This is a pattern which typically rallies all day long. Technically it did, but it's not good that we couldn't overtake the middle of the day high until big money had left the table. Once there were only about 25 minutes left to trade and all the big money packed its bags and went home, the amateurs bought with abandon. They created a wall going higher with no pullbacks at all. Usually these players are wrong. We also have the advantage of having a symmetrical triangle. We know that these usually form in the penultimate move, so once this is done, prices tend to reverse and go down through the triangle. There are a number of measuring techniques to figure out how high this move is going to go. One of the commonest is to take the height of this first leg, add it to the high of this last leg, and get your target right there. There are other ways of evaluating the formation. One is to take a Fibonacci grid, and when you see all these prices hit on the nose, the implication is that the target of the triangle has been satisfied. Now typically it really tops out at the time marked by the crossing of those lines. So it wouldn't surprise me if we had a gap down Tuesday and then rallied up and filled the gap or even went slightly over it. I don't think it pays to gild the lily too much here. The call for the market open on Tuesday is for a significant drop, most likely right at the open. Anyone who wants to see this play out in the past just has to go to my book. And that's today's call.